What's up, everyone? It's Rey-Jay back with another video. And in this one, I want to break down what's happening with SPY, Tesla, Nvda, the QQQ, and a couple of other tickers. I'm going to break down why the charts are looking quite bullish approaching tomorrow. I've got a nice looking bounce thanks to Jerome Powell and also other factors. I'm going to break down earnings as well. Let me just mention that I am not a financial planner. Make sure you take nothing I say as financial advice. And also, if you guys can, please check out the Moomoo link. You deposit $100, you're guaranteed 5 free stocks. Deposit $1,000, and you're guaranteed 15. And the offer ends very soon in just about 5 hours from now. Anyways, the market had a nice double bottom leg structure developing on SPY. We saw a lot of upside as a result of this, not to mention Jerome Powell. And this has been looking quite bullish from a technical standpoint. Now, there are two factors involving the markets. One of them is very bullish with the Fed. The second one is going to be Meta's earnings. And so far, things are pointing in the upside direction. We're also seeing the QQQ up over 3%. We're up 2.96% during the open hours and even more up in the after hours. So the market is looking very, very bullish. But the question is, why are we pumping like this? What did Jerome Powell say that's very important? I want to give you guys some insights on that first before I break down the charts. So the Fed has held interest rates steady, but they're hinting at potential cuts ahead. What does this mean? So Jerome Powell was saying a lot of important things. He said that they're not necessarily in the clear just yet, but the Fed has to continue to monitor the situation. However, when questioned from a bunch of like the interviewers and reporters, he said that, listen, the Fed has to continue to look at the data. They're not necessarily ready to cut right now, but if they keep getting good data, if they keep getting, expected data again and again and again, for September, the Fed will most likely cut. So he basically said that, and that's huge news for the markets. The Fed is getting ready to pivot, and that's absolutely massive. Now, he did not say that they will do it. He's saying that they need to look at the data that comes out. As long as the data is really good, they will end up doing it. So that's something that's very, very important and worth noting. He also mentioned a lot of other important factors. He was more dovish about how the economy is looking stronger than expected. The labor market is going to continue to be monitored. The Fed has to also be tracking the labor market when it comes to their policies. Then he was also asked about a recession and a hard landing, which he said is unlikely. And he mentioned that the Fed is once again doing things better than what a lot of people were expecting. So he gave the Fed a lot of credit. He said that inflation is making a lot of progress to come down to their targets, and he's very, very optimistic about the U.S. economy. However, like I said before, although it's very probable the Fed may end up cutting in September, it's not guaranteed quite yet. Okay, we need a lot of good data that's coming out, but Jerome Powell said something very different from usual. Usually the guy's very ambiguous. He's always just saying we have to look at the data, look at the data. This time he said we're going to look at the data, but if all the data is good approaching September, the Fed will most likely cut. Why September? The answer is because there's no FOMC again until September 18th. And right now, the market thinks that there's a 90.5% chance that they're going to do a cut. Now, other countries like Canada, if you look at like the EU, they're starting their cuts already. And the US is, in my opinion, in no surprise to be kind of following that trend. So with that happening, there's a 90.5% chance, according to the markets, that the Fed is going to cut in September. The market's rallying as a result of that. The market's excited, and I can't wait to see how this develops. So that's why the market was pushing, even during Jerome Powell's speech. We went from 538 a share yesterday all the way up to about 553. That's a 5-point move to the upside. Very, very nice move by SPY. And we saw the QQQ even more bullish. So the QQQ was on fire. We're seeing a lot more buyers stepping in. But the question is, what else is affecting this? We have another very, very big set of factors. As a reminder, we have big earnings also coming out. Notes that after the market closed today, we just got Meta announcing its earnings, and things are looking very, very bullish. For tomorrow, being Thursday, we have Moderna and Crocs announcing earnings before the market opens. Not to mention Amazon, Aapl, Intel, and Coinbase. Those are also going to be very, very important. So we'll have to see what things end up looking like. But let me just note that right now, our main focus is going to be on Meta, and Meta is doing very, very well. Shares are up almost 7% right now. They beat on revenue and earnings expectations, and their forecast has been rising. So why is this important? They beat on earnings. EPS is at $5.16 a share above expectations. Revenue is at $39 billion above expectations. And their guidance has also increased. They're now expecting their revenue guidance to be between $38.5 to $41 billion or $39.75 billion, which is the middle of the range. Analysts were expecting 39.1 billion, so we're actually doing better than expected. Revenue is also up about 22% from $32 billion a year ago. We're also seeing a lot of growth, at least in net income, which is up 73%, and we're looking at some strong guidance. So good stuff right over here. Their expenditures also look unchanged for the year as well, which is good news. So good stuff from Meta. Share price is up 7%, and that is bullish for tech. Now, one last thing or two last things I want to talk about would be the last data coming out for tomorrow, not to mention the charts for the fear and greed index. Let me just note that there's not much data coming out for tomorrow. We just have initial jobless claims in the morning at 8:30 a.m. Eastern Standard Time, an hour before the market opens. I'll give you guys some insights on that. And then after that, 15 minutes after open, we have the SP Global Manufacturing PMI, which is kind of minor. But then we do have important data coming out at 10 o'clock a.m. We have the ISM Manufacturing, new orders, PMI, and prices all coming out. This will be very important for inflation. So expect some volatility at 10 o'clock a.m. We'll see if this pumps the markets or not. But so far, as we approach this data, I still think the market's going to pump. Now, the market is neutral right now. We were just fearful. Now we're getting back to neutral, getting closer to greed. A big shift right now. Momentum is becoming more greedy as we're getting a nice bounce on SPY, the S&P 500, relative to its key moving averages. The overall puts and call optioning is starting to shift back down as we're starting to see some puts being closed and calls being bought. This is shifting for the past day, and the VIX is starting to dip a little bit. This could start to dip lower, which could help the market push. Anyways, enough of that. Let's talk about the charts. How are things looking? The answer is bullish. SPY has a nice double bottom like structure. If we were to hypothetically, okay, if we end up losing 547, I will turn back to bearish. We are not even close to that. We're actually favoring upside. If we continue to break the high of the day from today at 553.5, we could easily start pushing up towards these highs up here around the 555 to 556 area. That's going to be our next target, and that's looking very probable for SPY. With the double bottom, we're actually favoring upside. This chart is looking more bullish, and it favors another nice little squeeze, in my personal opinion. So SPY is looking bullish. When you look at, for instance, the daily time frame, this looks pretty good right now. We're getting a bounce on the daily. We've come up to fill this gap, and I think we could be testing this gap resistance. Break that, and we're going to be going up to the next wick right here. So SPY is looking more and more bullish. Pretty good so far. Now, what else is dictating this would be what's happening with ES. I want to say that ES is looking bullish on the daily. And then also, let me show you this on the 4 hour. The 4 hour has this gap to fill, so I think ES is going to be pushing easily to the 5600s. This will push SPY up a couple of points, so there's more upside potential in this. To be bearish on ES, we need to lose 55.35. We're not really close to that. We're actually favoring the upside, so it still looks more bullish to me. For SPX, we're looking a little bit more bullish. We have a bullish cross in the 4 hour PPO. And then when you look at the daily, I want to show you guys something very important. The daily has this gap to fill. We haven't fully filled this gap quite yet. So I think we could try to push a little bit higher so long as we hold support. If we were to hypothetically lose support at 54.97 around that area, we could come down to fill the gap at the 54.70s. So watch and see if that ends up being the case. But the SPX chart is favoring upside as a stronger possibility. So far, that's what's looking very favorable for the markets. Upside is looking more and more profound. So we'll see if that ends up being the case or not. Overall, we're looking pretty good. So we'll just have to see how things progress. But SPY is favoring the upside. How about another big winner of the day, which is Nvda, which is up how much? 12.81%. Nvda is on fire. We're looking bullish on the daily. When I pull up the 4 hour time frame, Nvda is trying to push right here, breaking resistance. Meta's earnings is also helping this, so I wouldn't be surprised if we actually go all the way up towards 125. We have a gap to fill as well around that area. So we are looking more and more bullish in my personal opinion. So right now, Nvidia is favoring the upside. To turn bearish, you want to see it lose 116. That does not look very favorable. It favors more upside. It's looking like it wants to keep on going. Bitcoin is looking a little bit more bearish. We're seeing money kind of like exiting crypto and entering equities. We have our 200 EMA at 64,500. I'll be watching to see if we hold this. If we lose this, we'll be dipping all the way down to the lower 64,000s. If we hold this, we could try to rebound. So we'll see how things end up going. For Tesla, Tesla's trying to rebound. We have a nice cup and handle like structure that's developing. If Tesla can manage to break past 235, I'm going to be looking to see if we can break that tomorrow. We'll easily go up to about 238. That's where we have our next previous support becoming resistance. And then if that breaks, we have an imbalance to fill all the way up towards the 240s. So Tesla's looking more bullish. It's been trying to bounce off its 200 EMA since earnings. We have a cup and handle like structure. This is favoring upside in my opinion. So if it breaks 235, look for another push on Tesla and a potential squeeze like move into the 238 area, then 240. If we lose 228, Tesla could dip back down to 225. That's looking less favorable. It actually favors upside. Why is Tesla bullish? One of the reasons is because of the Fed. Remember, Tesla is very sensitive to interest rates. Okay, they have a big effect on the auto industry. So if the Fed is starting to cut these rates, the market's kind of like pricing in that eventually interest rates will drop, and that's going to improve a lot of things for their sales. So that's going to be very, very important. We'll see how things end up going. For NQ, it looks bullish. It straight up just got a nice bullish divergence, a nice bounce. It's going to be testing its 200 EMA at 19,733. Break this, and we have a gap to fill all the way up towards 20,000. We could be on our way up there. We look bullish on NQ. The QQQ is on fire. It's on fire. It's breaking past its 50 EMA. As long as we hold above 472.69, we favor upside. If we keep going, I'm going to be watching this previous support becoming resistance around 475. If that breaks, I think we could be getting very close to about 480. I think 480 is a good target. I think the QQQ is becoming more violent. It had a big 3% day. It's on fire, and I think that it has more upside potential. I think that Jerome Powell is helping this pump, and I think this might try to keep going. So the QQQ will likely try to continue this bounce. Now, if we were to turn bearish, I want to see it lose 466. That is miles away from where we are. So we favor upside, in my personal opinion. For Aapl, if we lose 222, I'd be looking at 220. If we keep going, I'd be looking for this imbalance fill. The chart is favoring this imbalance to fill, and us getting very, very close to 225. That's looking more favorable for Aapl. Now, Aapl may also rally for another reason. That's because we have earnings coming out tomorrow. So earnings come out, by the way, after the market closes. So when the market's open tomorrow, we might see a little push in anticipation of a good earnings. Apple's looking bullish approaching earnings, so look for a push into the mid 220s. For Palantir, we're seeing a little rebound as well with the Fed. Look for 27.34 tomorrow. If that breaks, we're going up to 20, almost 28. So we favor upside as well on Palantir as we're making higher highs and higher lows. So this looks like it wants to bounce. For Supermicro, we're looking a little bit more bullish, especially as Nvidia is pushing. If we keep going, if we manage to break past this resistance at 730, I think our next target is going to be up to 753 or 50 EMA. We look bullish on Supermicro with a nice inverse head and shoulders. If we were to turn bearish, you want to see it lose 700. That does not look favorable. We favor a move up to 761. So I think that's more and more probable. For Rivian, we're kind of trading sideways within this range. If we manage to break past 16.6, we'll be looking for 17. If we end up losing support, I'll be looking for basically 16 flat to start tipping down. We favor upside. It has a nice looking curl like structure, and we could try to push here. So we're looking more and more bullish in my personal opinion. On top of this, when it comes to SoFi, we're looking more bullish, especially after what the Fed just said. If we were to lose 7.33, we could turn back down, just hypothetically. If we end up breaking past 7.7, I think we're easily going up to $8, and I favor 8 on this chart. It's looking more bullish to me. The IWM Russell 2000 has a nice cup and handle like structure, looks bullish. If we could try to break this resistance, that's 226. I think 230s are coming. If we end up losing 222, look for a dip. But I think the small caps have a lot of potential in the month of August. So this favors a move all the way back up to the 230s. I think the IWM looks bullish. AMD is finally trying to bounce. Got a nice move. If we were to lose, hypothetically, 140, we turn bearish. As long as we hold above this, we favor upside. So I think it's going to be testing 150 tomorrow. So look for a bounce. Looks more bullish to me. ARM is actually dipping right now after earnings came out, so not very good. It didn't do too well. So this is showing some weakness, might be dipping back down towards, it depends on if 125 holds or not. If not, 116 could be coming. So this is actually looking a little bit more bearish after earnings. So it is what it is. For Coinbase, we're looking in the middle, so with Coinbase, because the problem is we have a head and shoulders. If we end up losing 222, we have a gap to fill down to about 218. And if we bounce, you're going to be looking for a test of 233. We're in the middle. We're kind of range bound. So watch and see if we hold. We also have support at 224. We have resistance at 230. If we could break past 233, we'll turn back to bullish, but we're just kind of trading sideways. So we'll just have to give this some time. It's kind of range bound. Amazon's looking more bullish. I'm going to be looking for 190 as our resistance. If this breaks, there's a gap to fill all the way up here towards 193. This is favoring upside from a technical standpoint. It looks very, very bullish right now, especially thanks to Meta. Meta is pumping like crazy. If we lose 490, we turn back down, but there's no sign of that happening. We're actually favoring more upside for a test of 510. If that breaks, we'll keep going. So far, so good. For Microsoft, we're looking more bullish. Look at 422.91 as resistance. If this breaks, I think we're going up towards 427. And if we reject it, we'll be dipping back down towards 415. This favors upside, so 422.91 is looking more favorable. I think we could be pushing higher, so watch and see if that ends up being the case. For Google's looking a little bit more bullish. As long as we hold above 172.76, we favor a move back up towards 176. If we end up losing the 172s, we could be dipping, but this favors upside in my personal opinion. GameStop is just trading sideways, might try to rebound as well with the market. Could be looking for a test of 23.5 again. I think AMC has the same thing going on, nice inverse head and shoulders. Could be looking for a test of 5.54. Last couple ones, we have DJT, still kind of flat. We're going to be watching, see if we can try to hold support at 28. If we lose that, we'll be dipping down towards 25. If we hold this, we could try to rebound to 30. We're just kind of consolidating, so give it some time. It's been 2.5 days of consolidation, so we're just waiting. The VIX is starting to dip a little bit. I'm going to actually pull up the daily chart. We're barely holding 15.87. If that breaks, we turn bearish on the VIX and bullish for the markets. We'll see. It's just barely holding support, but the daily is starting to contract on the VIX, and there's a risk that this might start tipping. That gives the market some more upside potential. Notice that the 10-year Treasury yield is flopping. This is because the Fed is going to likely cut soon. This is because of the Fed being more dovish, because interest rates may start dipping. So this is what this is implying. This is technically a little bit more bullish for the markets. The dollar was trying to break out only to fail. So this is now favoring downside. If we fail to hold 104, look for 103.5 as the next potential target. If that fails, we're going to be coming back down. The dollar is looking more bearish. If you look at this trend, we're still dipping. And also, if you look at it like this, we have a double top-like structure. The dollar is looking bearish, which is bullish for the markets. So far, the bulls are gaining the edge. So with that being said, let me just clarify one last thing. Politics are also very important right now, as there's a lot of things going on around the world. So long as there's no major attacks or anything crazy that happens, the market should rally. Okay, as long as there's no crazy news, I favor the market rallying. And right now, we're not really getting that. It's nothing that intense. So we are favoring upside for the markets for tomorrow. That's looking a lot more favorable in my personal opinion. Now, Jerome Powell has shifted to some extent. Usually he's super ambiguous. Usually he does not give us the answers that these reporters are asking him for. But this time he gave them some answers. And I think this was actually inevitable. And with the time coming, there's going to be a very, very big shift in the equities markets. So I'm very excited to see how things end up developing. I just want to say I really appreciate you guys so much for your attention. Thank you so much for listening. I hope you guys have a very, very nice day/night or wherever you are around the world. One more update about the channel. I just want to mention that I'm going to continue to upload my videos as I continually do. I just want to note that it's been a very, very big pleasure to make these videos. I really enjoy it, and I really enjoy, day trading as a whole. I really love it. I love the work that I do, and I just hope that you guys find work that you guys enjoy as well. So the market's in a very, very interesting phase. Okay, now we're entering a phase where the Fed is getting ready to pivot. The Fed is getting ready to cut. There are people out there that say that the market will crash after the Fed cuts, but as of right now, we're not there yet. There's going to likely be a cut in September. We're still many months away. So approaching that, the market's going to likely try to continue this rally. We have quite a few gaps to fill on SPX, not to mention ES and the others. So we favor upside just for now. So don't worry about all the talk out there about the market crash and this and that. We just look at the market for the shorter term time frames. Just look at what the charts are telling us. Right now, the charts are telling us that there's more upside most likely coming, thanks to Jerome Powell and also thanks to earnings. So approaching tomorrow, the odds greatly favor upside for the stock market. Watch your levels and do what you have to do, guys. All right. So with that being said, I just want to say once again, I really, really enjoy the work that I do. Excuse me, the work that I do, and I appreciate all your guys' kind words. Please leave a comment down below if you guys are interested in, if you have any questions or anything like that. I'll try my best to answer as many questions as I can, and I'll do the best I can to provide you guys with another great video tomorrow morning. So we'll see what happens with the initial jobless claims. I'll be back tomorrow before the market opens to report that. And until then, take care, everyone. Please have a great, great, great rest of the day, and I'll see you guys very soon tomorrow on the next one. Thank you so much for listening, and peace out.